Minutes.
Thank you, Mr. Chairman. Ms. Galante, the intent of the FHA, of course, is to help those. I apologize, I can eyeball you better this way. The intent, of course, was to make sure that we had affordable housing, that those that low to moderate incomes could have access to the American dream of ownership of a home. To that extent, you know, at the height, I guess, of the boom, and the market that share that FHA had was about 2%. Today, it's about 56-some percent. Which leads one to question a lot of things, especially not only how and why it happened, which we'll have that debate for quite some time, but specifically with regard to the future, do you have an opinion as to whether there is sufficient private capital, a capacity of private capital in the market to return to the days where the FHA only had 2% of the market in mortgage insurance?
So let me just say that FHA had 2 or 3% of the market, you know, as you said, during the ramp up to the bubble. Our normal market share, you know, ranged over time from, you know, 10, 15% would be kind of a normal market share. We are actually, you know, at, I think, 12, 13% today. The challenge to the private capital that you speak of is the entire market has shrunk, and that private capital.
But why has the market shrunk? It's not because there isn't sufficient capital. Is it because of the rates? Is it because they're trying to compete against a monopoly called the FHA?
No. So I think this is really important. The FHA is, you know, not competing with the entire broad market. The MI companies, for example, I would say, you know, their market share over the you know, past couple of years has been coming back steadily, and their pricing is now is competitive for basically anybody over a
would you agree, though,
FICO score today? Yes.
That approximately 25% of the endorsements that FHA has are made up of loans that are considered high income borrowers. And I mean, that shouldn't be the function of the FHA, should it? I mean, this should be ceded to the market, shouldn't it? I mean, at one point it was 16%. Now you're up 25% of high-income borrowers. So that's an area we should address, shouldn't it?
Well, there's two areas we should address. One is the global market, and that is going to take, and I appreciate the efforts on the PATH Act, that is going to take resetting the entire housing finance system well beyond FHA so that private capital understands, you know, how to play and has the right
if they're given the opportunity to play.
Framework to do that. But FHA, in terms of its market share, you know, we ramped up 2009, we've dropped way back down.
The maximum mortgage loan value of $729,000. I mean, that's usually considered for a high-income borrower, wouldn't it be?
So again,
I mean, in my neighborhood in the Central Florida, it seems like it would be.
That is only for high-cost areas, and to be clear, that expires in January of 2014.
And it goes down to what?
Congressionally, these were congressional limits that were put in place, and FHA has operated within those. They expire in January.
You know, FHA, of course, my friends on the other side say this is not a bailout, it's just policy and it's accounting function. Regardless of what it is, just because it's policy doesn't mean it's good. And I think it's a bad policy that we now have to have the Treasury issue a check for $1.7 billion to make up for a shortfall. Do you think that would be in the best interest of not only the FHA, but quite frankly the Treasury as well, to have it repaid?
So again, over time, everything that FHA earns goes back to the Federal government.
And with regard to your capital standards, I mean, let's face it, FHA has the best capital standards than anybody, if they even exist. Why wouldn't the private mortgage insurance companies be allowed to subject to themselves the same capital standards that the FHA has? Would that not, in and of itself, create a more viable market of private capital?
So, you know, FHA exists as a government entity. It's very different than a private mortgage insurer.
But it competes against the private mortgage insurer, and that's my issue here.
They play different roles. The private mortgage insurers are normally guaranteeing a top amount of mortgage insurance with.
So you don't think they should have the same capital standards?
They're regulated by state agencies, state government.
It's okay to say no. That's okay.
I'm just saying it's a different business, and it's regulated differently.
Thank
It's
you.
entirely different.
My time has expired. I'll
Time of the gentleman has expired. The chair now recognizes the gentleman from